Good evening, everyone. You've got Shaun Downey and Jeremy King from Trading Safely. Welcome to tonight's weekly Masterminds webinar. We're going to cover off on all the major markets, Aussie, Euro, Pound, Dow, E-mini. We'll have a look at some of the major stocks, US dollar, yen. Shaun and I've just been flicking through a few of the markets. Definitely at a critical time right now. Looks like we've got a couple of days. Well, tomorrow's a holiday in the US, and then we've got the end of the month. And sure enough, the markets have made things as difficult as they possibly can, and left it right to the last day to make what would seemingly be either a breakout move in equities or a major failure. And as usual, it's down to the last day. So we're going to go through the numbers and the levels that we need to close over to send the market higher, and also to send it lower. Just while we do that, I will quickly show you our disclaimer, if you wouldn't mind just flicking through that. Shaun, would you mind quickly introducing yourself and then just running through the week that was and anything that stood out to you and what you're looking for this week?
Yep. Hello, everyone. It was a pretty interesting week, actually. You're right in saying that, as quite often happens, it's going to go right down to the wire for the last day of the month on some of these things. The key takeaways was the reversal in crude. So we flagged that on Tuesday and then Wednesday morning. It broke a pretty key level on Thursday, and then on Friday we bounced right back up to it, 49.88. So a common pattern in a lot of markets is very low volatility, quite narrow ranges, and then sudden one-day movements. So we had it on equities a couple of weeks ago where everyone suddenly headed for the exit at once, and then we claw it all the way back again. So crude, major reversal. Gold, not quite bullish. It actually performed very well on Friday, considering what the dollar did. But it doesn't have to go much higher, and then that opens up another $30 or $40 on the upside. Silver is likewise closed right at a key level at 1734. So the monthly close is going to be pretty important there as well. On currencies, we had a warning sign on the euro on Monday, and we've come back a bit, but not a great deal going on. The dollar index has come down to a quarterly support point, and so far has held. So again, close to some important levels. As far as equities or individual equities go, E-mini took out our final level at 99 on the Tuesday, I think. Nasdaq has powered ahead as well, and the Dow has got to close about 90 points higher. It's very close to the previous high, and so Tuesday's close is critical there. Make new highs, all-time highs, and that opens up the upside. So pretty important there. On individual equities, Google and Amazon fighting neck and neck for who's going to be the first to close over $1,000. So the rally, when you look at the individual sectors and components or stocks, remains very narrow. But these stocks are so huge that they just drag the indexes with them. So the leading sector, which is semiconductors, is in the what I call topping process of where it goes from being fashionable to unfashionable. I think we're about halfway through it. So we've had some good news and bad action. We've had a one-day collapse, and then it starts going back up again. We need resistance to move to the top of the trend before we can start saying that the semiconductor party is over. And so the leaders are still there, and that's really what's dragging it. And if we do get those monthly closes, there's no reason to think that we're in for another leg higher. But as we're going to talk about, then we start getting into quarterly overextension, which would be possibly for the end of June, but even into the third quarter of the year. But we'll take a look at that. So interesting week. Bonds were pretty boring, not much to say there. Generally, commodities underperformed. So that's the takeaway this week.
Okay, so we're starting with the Dow Jones Cash. The critical levels are pretty there. Right in front of you. We've been at pains over the last little bit to say equities aren't there to be. So the major trend hasn't changed in equities, but there is a pause or a test. So when we see 3 months like that, where we are unable to take out those upper monthly bullish levels in pink, then we do need to see some moves higher very, very quickly. At the minimum, you would expect to close above the high, or even last month's high here would assist the trend higher. What you don't want to see is closing under last month's close there, which happens to be at, I think, circa 20,920 or around there. Let me just check that number, 20,940. If you're under that, then there's a bit of a problem. Conversely, if we're taking out these bullish levels and new highs, then there really is a fair way to go to the upside. And we're sort of pointed that out at times. I might even just flick over to... So shown on another part, I won't pull it up now. But if you look in our Slack forum, there are some longer term charts of the Dow that show just the amount of room that it's got, and you're looking at 23,000 pretty quickly as the next sort of main banker resistance if you were to pop through here. So the key levels would be last month's close, 20,940. If we're under that, there's an issue. If we're taking out on a closing basis the recent high, then watch out, the market can explode. So it will be a similar thing for the S&P. So we'll scroll up E-mini futures. The monthly close last month was 2380.75. Needs to be above that. And we're looking for a quarterly bullish close above 2430.5 at the end of June to add another quarterly buy signal. So really, we're sitting tight until Tuesday, but if it does close higher, folks, watch out, it can go crazy up. Conversely, a failure at 2380 is probably likely to test last year's close down here at 2233. So hold your hats, they're the major levels. Looking forward, I've got levels up here at 2490 and 2530, so the market can move pretty quickly in equities. Nasdaq will be the same. I'll just call it the Nasdaq futures. So already, key difference with the Nasdaq is it's closing this month above the upper monthly bullish there. That makes it different to the other indexes. The other indexes are still trying to find their feet versus those monthly bullish levels. So the Nasdaq is the strongest of the lot at the moment, and we would like to see the Nasdaq hold this close at 55.82. So pretty common theme there. Critical couple of days, could move a long way down if it does get a belting on Tuesday. Seemingly unlikely, but I've seen stranger things happen on the last day of a month. So we'll sit tight there. We might just move into currencies now and have a quick look at the dollar index. Just chatting to Shaun about this. The dollar index went all the way up to last year's bullish pivot and missed it by a fraction at the end of 2016, and ever since has made its way all the way down to the equal and opposite level the following year. So what doesn't go up in one year goes down the next. We're at it there. This orange level here is the lower yearly bearish level, but this brown line at 96.86.5 is a pretty critical level, and we think that a monthly close under 96.86.5 could open up the sort of 94 zone. So at the moment it is oversold on the monthly and weekly level, and so far it is holding this quarterly critical level at 96.86, and it is at a yearly support level. So very keen to see if we can hold this over the next couple of days. And certainly, if it does hold, then you want to be prepared for another move. And if it fails, well, it looks like it's got a couple of cents to the downside before we could think about reviewing another move higher. Interestingly enough, when we project the pivots of where we are now, we're now saying that this quarterly bearish has moved under the annual, and that means that we've got a potential quarterly slingshot on our hands for the dollar index. So if we were to fail and end up back here, we're going to be moving into a zone that would potentially yield a decent move higher. So, Shaun, any thoughts on dollar?
Well, I think it's more about the euro at this stage because it's got such a high weighting on the dollar index. We've had a minor negative on the euro, which hasn't really developed. The thing there is on the euros, we're not really at any particular resistance points. So, it's a warning only. So, for me, said before that selling weakness in the euro is always a mug's game. And it feels to me as though the market wants to squeeze every last short out of it, every sentiment short that's there. And the major levels are up at 116.19, isn't it? So a long way away. And on the futures, I think it's at 119. So if we do break down on the dollar index, then we already know there's a fair way to go. And we also know there's a fair way to go up on the euro. So pretty important point. So certainly not having been very negative to the euro a few weeks ago and being wrong, until we get to a major level, it's going to have to really prove itself, and we're not at a level where it can do that at the moment on the euro itself.
Yeah, well, and this is where we had our view on being short the euro, and because we were up at the yearly upper bullish pivot, this orange level, and not only were at the yearly level, we had this monthly overextension, which is these pink dots. So that was a good place to have a go, but obviously we were wrong. That's fine. Looking ahead, the opposite of the dollar index has opened up. So these little brown dots there, they occur when this upper quarterly bullish level moves above the yearly level. So we already know next quarter, based on where we are now, that the euro is moving into an extremely overbought position at the quarterly to yearly level, while it's still in a broader downtrend. The only way that we would remain bullish the euro is if we were to close over this upper bullish at the end of the year, and obviously that's still got a long way to go. So we are still in a downtrend, with broader downtrend at the highest time frames. This is a monthly and weekly uptrend we're in. Don't forget that. We did have a go here and we were wrong, but it looks like next quarter there's bigger energy to the downside lining up for the euro. So certainly based off this and where we are right now, depending on where we get to at the end of the quarter, this 1.14 zone looks pretty tricky for the euro, and we'll keep our eyes on that. But certainly right now, even none of the peaks have moved up, have they, Shaun, above price? No, they haven't.
Nothing's moved above and nothing's moved below on the dollar index, and so that's what we need to see before we get. That's where our timing points start to come in, and we're not at that point yet. That's for sure.
Yeah. Yep. So not enough evidence on the euro, but we can say that next quarter does look like there's a good chance in time to be watching for a move to the downside. US dollar yen is at an interesting point. It's right up against last month's close, and that's no surprise. Bigger picture, it's been selling off recently. It's quarterly and monthly downtrends, but bigger picture has still got yearly and semi-annual uptrends. And right now, next month, it's moving into this oversold at the quarterly level, which means it can go a lot higher, assuming that it can close above last month's close there, which is around that 111.8 527. We'd like to see it above that to be moving higher on a monthly basis. Other than that, the market, at the weekly and monthly level, it's fairly stable. And the quarterly level looks potentially very oversold. So if the Dow does happen to break up and the US dollar yen is above this 111.52, there's no reason it can't go a long way up pretty quickly. And we'd be looking for it to take out last year's close here at 116.92 on a monthly basis for it to really rip. Some of the bigger targets are up here around 123, and above that there's like fresh air. So one step at a time. I might just duck back into the Aussie now. Aussie dollar, Shaun, what's your views on the Aussie?
Well, the Aussie came up to weekly resistance, stopped about 3 ticks short of it, and we had I think it was a UFO on Monday or Tuesday. So we've had a negative signal. It sort of drifted lower a little bit. The thing about the Aussie is all the big levels are above price, and there's not very much below it. I think there's one daily level, and that's about it. So we're still in a situation where the Australian dollar is under pressure. So negative until it closes above, I think it's 74. I can't remember. 74.32, I think it is. So there was a signal. So no reason to be long. I'll just call it up on my chart.
Yeah, sorry folks, I'm just having a few issues with
Yeah, so 75.25 was the weekly resistance. We had a time continuation sell on Thursday, and we've drifted a little bit lower. Support is a long way away. There's a monthly level down at 71.60, which is 270 odd points away. So until we make a close above 75.25 basis spot, it's negative.
Yeah, okay, here we go. Sorry, folks. So, yeah, there's the lower quarterly pivot, early 73s. We would like to see it underneath that at the end of June, but then a retest of last year's close at 72. And then, yeah, there's lots of spaces to the downside for the Aussie. Now, to be wrong, if the Aussie was to take out this sort of 75 level at the end of June, then I'd have to seriously question the Aussie, because that's the upper bullish semi-annual level around 75. So let's just, we're under that. Then there's probably another bit of evidence that the Aussie's still got weakness, and you can see at the top here we do get that quarterly overbought where the brown dashed line is above the orange, so that's the quarterly above the annual. You can see the move that's ensued right on cue. Let's have a quick look at the pound, US dollar. Very tricky spot for the pound because it was at a weekly overbought and quarterly overbought, and then been showing some recent strength really. On the spot, it looks like it's managed to. I'm just going to put in the actual pivots. So the pound, yeah, I mean, wow, really got to touch up on Friday, didn't it? So now it's under last month's close. It's been double overextended. We are at the yearly resistance in a downtrend. So yeah, interesting times for the pound. It needs to get a grip and be back over this, whatever that level is there, 129.48. It needs to be back above that sort of zone in the next couple of days. Otherwise you have to say it's wanting to look down again. That has implications for the euro pound as well, Shaun, given what the euro is doing versus the pound. Looks like
there was a warning on the euro pound again on Monday, but then it reversed back up. So the euro pound is making new highs. Yeah, you see it there.
It's interesting because When you go back to like the longer term high, I mean, this was third up annual standard deviation up here, this zone here. So this was like a major overbought area. And since then, at least at the monthly level, we've been tracking on a bearish basis. We've never been able to take out any of these pink upper levels. So this will be the first time. I'm very keen to see if the euro pound can take out this quarterly level as well, because that would be a bit of a reversal in my mind, from what was potentially a major high in the euro pound and potentially breaking down longer term. This would seemingly be a reversal. So very keen to see that on Tuesday if we are above this 0.8679 level.
Well, the thing there is, of course, we know that the euro hasn't got any resistance. The pound has.
No, that's right. And the pound's looking in trouble.
So the pound looks in trouble, and the euro's got nothing particularly to stop it, which implies that probably the big move is in the cross. So if we stay up here come Tuesday, then there's not a lot above there. Again, sentiment tends to be negative the euro and a little bit more undecided on the pound. We've got the election coming in about 10 days' time, but I don't think that will really make much difference to anything currency-wise.
So this is the euro pound on the annual chart, and you can see this is that high that I was just talking about up there, back tested that, whatever that is. It's a 40-year uptrend line. That gave you the third up standard deviation on a yearly basis, and we're now basically heading towards back testing this downtrend line. So there's a bit going on there, in the euro pound. For me, I want to see it above this on Tuesday, and it looks like it will be, so interesting. Next, we might have a quick look at the metals. So let's just run through gold. We've got a couple of days left, folks, and that level there, 1269.5, that's last month's close. So we would like to be above that. A month-on-month closing higher is a bullish indication. So we would like to see that for a sort of a sustainable move. It's been, reasonably well behaved lately. We had this quarterly oversold, then we got the weekly oversold, and then weekly overbought. Sorry, weekly overbought and weekly oversold, and it's really making a range around this upper annual bullish level. So it is rotating longer term, and I know last weekend we were talking about this semi-annual level here at whatever it is, 1251. Need to keep an eye on that one coming into the end of June, I think. If we'll be back under there, then it's probably a fair warning that all's not well with gold. So for me to be bullish, I need to be above 1269.5 at the end of the month, and to be bearish, you're talking about sort of being under this 1227 zone on a weekly close to open up, last year's close and lower. But in the intermediate term, we've got quarterly, monthly uptrends, even weekly uptrends fighting. We still have a broader downtrend in place, but it does look like gold is rotating. And the reason I say that is we took out this quarterly bullish pivot last year, and now if we take out this semi-annual as well at the end of June, then there's more evidence, there's more writing on the wall that gold is doing its own, it's potentially moving higher. But you got a view on gold, Shaun? I know you touched on it.
Yeah, it's just got to just do a little bit more on the upside, and then it opens it up basically. It's held that weekly level, a weekly peak point through on a closing basis. So, and its performance was good considering the dollar. So, got a little bit more to do, and then there's another $30 or $40 on the upside. So, it looks positive to me.
Yeah, this is the major level up here, folks. That's the high, 1307.8. That's the high of the yearly sort of closing low. So if we're above that at the end of the year, then gold can go tremendously up. on a closing basis. So just remember that number there, 1307.8. That's a big one. Okay, let's have a quick look at energy.
Or you want to do silver? Silver's an important
Oh,
point.
yes. Yes. Yep. Let's do silver. Okay. So silver's, what can we say about silver? We can say that, uh, yeah, it's also having a battle with last month's close as well, trying to close on a monthly basis higher. If it does do that, then it's opening up really these sort of annual levels again. So it does need to sort of be above this 17, whatever that level there, 17,155 come the end of Tuesday.
There's also a weekly level at 1733, which is effectively where we closed at. So if we close above there Tuesday, so into the month end, that opens up quite a lot really. The next weekly level is 1871, so 140 up. So for me, there's space there, and so it looks a little bit more to do, same as gold, and then it can rally pretty strongly.
And just, it's interesting we had this quarterly overbought here as well. You can see the spectacular move it had on the downside as a result of that. So pretty critical to see what silver does over the next couple of days in relation to this closing area. It's pretty tight there. So big levels. Energy, I think last month's close was 49.19 from memory. Needs to be above that to hang on to move higher. Well, unless we're about to get outside of that sort of downside. But there it is there, 49.19. That's for me the first port of call, and a bullish level would obviously be above 52.25 at the end of the month, which is seemingly unlikely. But not surprised to see this move down right at the end of the month to test out last month's close. You often see that. So all the indicators are still saying oil is bullish longer term, and we haven't had any alternative evidence yet. And I say that because at the end of last year we took out the upper level, yearly level, and the quarterly level, and we have not been able to take out any of the bearish monthly levels since at the end of the month. So all these wild swings in oil are just a function of oil's history, and because oil's moved down from 100 and whatever it was, $115 to $32 in the last few years, it creates this space between the pivots. It's due to volatility. That's why we're getting these rapid moves without actually changing the trend. So I guess for me, I want to see it above 49.19 for a start, and then we've been fighting this closing level at 53.89 for an awful long time. I think we need to be above there pretty promptly for oil to keep going. But at the moment, for me, it's still bullish until we get a close really down under here. I think a quarterly close under here where I'll change my mind on oil. Sure.
Yeah, it's just rotating. Simple as that, really. It's you can get some wild swings, but we're really trapped in quite a wide range, really, and we're arguably in about the middle of it. So we've had a negative sell signal on Wednesday and Thursday. To me, it just rotates. I mean, one thing that's interesting is actual oil stocks are not reflecting the price of oil. So a lot of them have been attacking their yearly lows, and obviously oil was nowhere near its yearly low. So oil stocks are not doing very well at the moment. Some of the ETFs are at some critical final supports. So oil needs to get a grip to prevent some of those oil sector ETFs breaking down again. They're very unloved. Oil is sectors 196 to 192, so very unloved. So certainly not interested in selling oil stocks, but they have to find some sort of basing process. They're at a critical level at the moment.
Nat gas is reasonably similar. I might just take a quick look at Apple and have a quick look at the Aussie index as well. And then we might have a quick look at corn and then wrap it up. Unless there's any other markets you would like to look at, Shaun?
Well, we'll be doing it for our members during the week, so I'm pretty big on some sectors and individual stocks. But yeah, Apple and Google and Amazon, they're all pretty. It's worth having a quick look at them. And corn.
Yeah. So Apple, we pointed out in our sort of yearly charts that Apple's at the top of a 14-year trend line, bang on it. That level there corresponds with the yearly trend line, top of channel line. So it's quarterly overbought, weekly overbought, at an annual target. We did get a reaction off the trend line straight away. If you can see how strong it is, the monthly close is all the way down there. So it's really got a lot of work to do to still be bearish, Apple. I guess in the short term, I'd need to see it at least back under this sort of monthly 149.72 over the next couple of days for me to start questioning it. If I look at some of the peaks, if they move to the top, no, nothing's moved to the top. So, Shaun, what's yours saying? Is the monthly moving to the top next month? Monthly resistance?
I doubt it. Let me just check. No, nowhere near it. No, I mean the thing about it is, it would take that topping process would take another 2 months on a monthly level. In fact, not even a weekly level was moved to the top. So the earliest any weekly level could go would be the week after next. So from that point of view, no top in sight. There's a fair bit that has to happen from a timing point of view. I mean, if you do go Google and Amazon, they're having a fight to see who closes above 1,000 first. So the other thing about those is whether they are actually overextended, and I'm trying to remember which way around it is. I think Amazon is slightly more overextended than what Google is, but they're not there yet. We always say don't stand in front of the truck, and there's no reason to stand in front of it at the moment. So yeah, you can see there that the monthly is above.
Yes, I mean that's in a a technically overbought position, and it's closing over it, which would immediately nullify the overbought. Just showing you how potentially strong that market is.
Exactly.
Yeah.
If you do Google, you'll see the difference. So while they're both at effectively the same price, they're not actually in the same. They're not in the same setup. Yeah, so Amazon there, if it closes above 1,000, it's a pretty big psychological level, obviously.
Yeah, okay.
Yeah, so Google's already done it. It's going to have to reverse a long way. If you do the other Google as well, GOOGL, because I think you'll get a slightly different picture.
What's the difference there? That's class A and class B.
Yeah, they're just different classes of share, but I'm pretty sure the chart isn't identical. Yeah, the price isn't. See, it's $20 higher. So whereas it's a GOOG, yeah. So technically the picture is the same, even though the value is different. But it's closing way above. If you look at some of those targets, once it broke out a couple of months ago, There's no stopping it really. So there's it's going to take a considerable amount of time for a topping process, if there is one, to occur anyway. So no reason to stand in the way of it. I think if you do Netflix as well, which is NFLX, which is why the Nasdaq is so strong, obviously. Yeah, you know, those things have no resistances, and so a lot has to happen on those before it's going to signal any sort of turnaround.
Yep. Like to see just a touch higher here. It's right at it already with a day or two to go. Yeah, bullish. And a long way from last month's close as well, which tells you that it's not going to close lower on a monthly basis anytime soon.
No.
Unless we were to get a savage outside reversal. It just doesn't seem likely, but who knows? Let's see what happens.
Okay, so we do corn just to finish up. Corn is very interesting. It's one that our followers are involved in.
There's lots of space opening up above on corn.
Yeah, it's very interesting. Just while the chart comes up, there's a few sort of statistics around it. Typically, corn, the December corn contract in a calendar year, its average range is $1. So if it went from 373 to 473, that would represent 100 or $1. And the current range, and we're nearly 5 months in, halfway through the year, so far is only 25 cents, which is reflected in the chart you can see there. So it's been very, very quiet. And we're still 10 cents from the actual high of the year. So some years corn has moved $3 or $4 or even $5. It doesn't really feel like it's going to be one of those sorts of years unless something dramatic happened with the weather. But effectively, it's coiling for a move. And there is... do you want to put up the moving averages? We don't very often show these. But these are multiple time frame moving averages. So they're all using weeklies or monthlies or quarterlies, etc., etc. And the thing that is interesting about them is that they're pretty much all at the same price. So it looks a bit of a mess. So all these multiple time frames have all coiled up, and if you see that green horizontal line, that's the one of the highest ones. And that's a quarter. Is that a monthly or it's a quarterly average? Isn't it?
It's a quarterly.
Yeah, it's a quarterly. Yeah. And we're currently above all of them. Yeah. So we're in a coiling move, and we are not a huge amount above, but we are above. And just bear with me a second. Someone's just knocked at the door. Do you want to carry on, Jez?
Yeah. Yeah. So the key takeaway for corn is that it's been coiling for a year. That's a major rising long-term upsloping moving average, and we can sit here and wait for the move to confirm. But really, I mean, for us, if we look at the monthly levels for the last, I'm looking at the upper pink levels. It's been trapped between them for a long time. So I think now we've had. Well, look at all these little white dots. They're all weekly overbought, and monthly overbought. We've never been able to take these out. So for me, I think if we can get like a proper monthly bullish close, then that would probably signal that we're breaking out. So I'm looking for close above 377.25 as an initial indication on corn at the end of the month, but potentially explosive to the upside. And there's a lot.
There's not much there. There's not much there. We've also got a monthly level at 384.5, so a little bit above. So that's a monthly peak level. So, the thing is, we're not going to stay within a 25 cent range. The other thing, just as a bit of background, The managed funds are short over 200,000 contracts, which is pretty close to the biggest short they've ever had, which I think is about 225. So the market, or managed money, is actually positioned for the market to go down. But if you look at the price, it hasn't really been going down at all. So a technical breakout opens up the potential for short covering, and this would be one of the times, again, we don't show it very often, but we would be looking at the volume and the open interest numbers, because the first thing that you would expect to happen would be, if it rallied, would be for open interest to go down, which would be shorts getting out of the market. If we rally and open interest doesn't really go down, it means that there's just as many people getting long as of people getting out of shorts, and your volume should go a lot higher as well, and that's when you get a really explosive move. So you've got the combination of people who are wrong getting out and new money coming in. So watching it closely, it is a little bit of a hostage to weather, which is fairly neutral. It's a little bit cool in America at the moment, but that can obviously change. But certainly one on our radar, and our members have been given a few different ways that they can get involved. You can do it via ETFs, options on ETFs, or the futures, or options on the futures as well. One advantage is, because the market's been so quiet, is volatility is very low, so option premiums are relatively cheap.
I'm just going to wrap it up with a quick look at the All Ords, which is the Australian Equity Index. Last quarter we had a bullish close, and we actually, on a closing basis, took out an 8-year trend line, and the back of that trend line was actually last year's close. And I remember at the time when we said, oh yeah, we've taken out this quarterly level, that's bullish, it can backtest that falling support line, which happens to coincide with last year's close. So in the short term, it would need to be under, what's this level here, 57.51 on a closing basis, to sniff of a bit of further weakness. We are at last year's close as well as major support. So we're basically just had a short-term correction to the downside. There's been no major damage done to the broader uptrend, which is still clearly up. If we happen to end up here on a sort of a weekly closing basis under 56.90, or even really at the end of June under 56.23, then you might have a look at 54.82. But we would like to see a close, really above last year's high. There it is, sort of there. We'd like to be above this, 57.30 at the end of this year to see the All Ords moving higher. That would be a pretty bullish signal for me on a closing basis. So I think that's it for now, everyone. Please reach out to us on Slack if you've got any questions, and we look forward to the week ahead. Shaun, any final comments?
Well, pretty critical Tuesday where all these markets move. One of the things that I've talked about in the inner circle during the week is how a great deal of stocks, their monthly resistance, are moving to the top of the trend. And so one of my feelings over the next few weeks and possibly a couple of months is the market leaders are not topping out yet. They're not in a position to do that. So that can drag the overall market higher in the indexes, and these other stocks that are in the same sectors. So they get pulled up, and then the real key will be if they get up to those monthly levels. Most of those monthly levels or monthly highs were created in March, which is why levels are moving to the top now. So that's my main thought, is that some of the weaker stocks can just get dragged up in the general sentiment, and then we have a decision point after that. But Tuesday pretty critical, and that euro pound, that looked pretty interesting to me. So watch this space.
Okay, thanks everyone. We'll see you through the week. Cheers.
Okay, all right. Thanks. Bye bye.